Welcome to Trading Lounge and the daily US stocks for Monday, June the 6th. On the weekend, I had a bit of a look around the web at Elliott Wave analysts, and it was pretty amazing, really. Half of them are bearish, and they're very convinced about that, and probably a third of them are bullish, and they were very confident about that as well. So yeah, it's the old thing, isn't it? You put I mean, I think we should lock all the Elliottians in a big room and not let them come out until they can actually come up with one answer. So my approach is that I can see the bearish side and I can see the bullish side. I'm looking at the bullish side because I can see stocks like Tesla that have, and we'll get to Tesla today, but I can see them that their whole move down appears to be corrective. So that's partly why I'm on the bullish side, for just in technical reasons for that. There's many different types of technical reasons, of course, as well. But I think when it comes to trading, you've like the analyst is not a very good trader, and the trader is not a very good analyst, and to pair them up to be equal is a tricky thing, and not many folks are good at both of them. They tend to be better at one of them than the other. So it's kind of if you put different hats on and play those roles, which makes it a little bit sort of easier. So that's really what we're going to do at the bottom here, because I don't really care too much about being right or wrong. Of course, deep down that it affects everybody about being right or wrong, but if our main goal in trading is to make money, then that's the goal that we need to focus on. So if there is a bearish count and a bullish count, I think that we need to understand both of them, and we need to understand at what point we can go long on or short on each one. And I think that's the trick to it all. So I think that what we'll do we'll just look at the NASDAQ first, and then we'll go in and have a look at the stocks. So we'll have a look at the bearish count and the bullish count on the NASDAQ, and we'll look at both ways of being long and being short, because as you may know, or as you can see, we've got some sort of little top in. We've had a sharp move on the Friday. So Friday is normally, in the bullish weekly cycle that I've got, is normally a bullish day. And if it's not a bullish day, then I know that we've got a change in trend. So we've obviously got a change in trend, and we're pulling back. So on the bearish side, it's not the total consensus out there. There's other accounts that are also quite reasonable that have this as a wave 4 here, and I can kind of understand that, because I can see that in Tesla, I can see that in Bitcoin, and Bitcoin is a Wall Street treating it like a tech stock. So it can be a wave 4 here, and we actually have one more move down in a lot of cases. So that's going to be quite interesting as well. It doesn't have to be the end of the world coming down into this space here. So with the NASDAQ here, we can look at it on the bearish side as an A wave here, a 3-wave move for a B wave, and then 5 waves up here for a C wave up here. So basically an A wave, a B wave, and a C wave. So at what point should we be looking to build, short positions into this? Well, we have our first little move down through here. So we could, depending on what term trader you are, you could short the B wave here, and that means as it rallies here, you could short it at the 61.8%. You could short it on the 500 here, the 12,500 as the retested resistance. There's all those little things in there, but you know all those. You know yourself. You know how you do things. So we can move down here in 3 waves. So we've got on the bearish side, we've got 1 and 2 and 3, and then we'd have wave 4, and then the 12,000 looks like a nice level to get a nice bounce off, doesn't it? You know, it's a nice big number. It's sort of, so we'll put that in there, and it's pretty close to the 61.8%. So I'm looking for, in this case, we'd be looking for a short trade. So the way that I will approach it is I will wait for 5 waves down here to the 61.8%, roughly around the 12,000, and then we will look for, if we get 5 waves down, then we can look at an ABC pattern that will come back up 50-60% or hit the supply levels up here, and then it will drop again like this. So that leaves our short trade over here for this. It also leaves just going to put a green line in there, so we can short it under that low there, because that would be the A, the B, and the C. If it's the if we do get 5 waves here, that means that after correction we'll get another 5 waves. So in that case, we could also short the 50-60% retracement area here as well. So that's how I will handle the short side of the market. The long side of the market, we'll look at that. So the long side of the market, we're looking at this as the low with wave 5, and then we've been, as you know, right from the get-go here, we've been counting 5 waves up. You know, we were onto it right on the low. It's not like we're sort of, you know, working it from up here. So anyway, we've got our 5 waves up here now. And then if it's going to be bullish, then we'll have an A wave, a B wave, and a C wave coming up here. So currently we've got this on the top here. I'll just put my B wave here. So in the next session, we should see some sort of little B wave rally. So we can put this B wave over, we can put that trigger on top of the B wave here. So that's one way that we can handle it as well. One of the other things, we can get in earlier as well, and we're going to really talk about that tomorrow. One of the things is that if we do get 3 waves to the 50% or even the 12.5 here or something, and then we start seeing an impulse wave going up here, well, then we'll look to work that impulse wave from the 12,500, because that will probably be the support. If there's going to be some sort of equality between wave A and C, it may just end up at the 12.3 at this point. So we'll talk about that in the next session, because we've still got, you know, it took a session to get this up here, the wave 4 to wave 5. So it will take the B and the C here time, and then we'll also see a little impulse. So our timing in the next session should be quite good to figure out if we can get in a position earlier than the wave B up there. But these are the 2 safe trades here. Okay, that's something that you should be able to do by yourself at that point. So I'll come in tomorrow and we'll look at building positions on the long side here, or if we need to talk about the bearish side at that particular point in time. So they're the 2 cases. Today, when I go through the stocks, we'll mainly just be looking at the wave count in a bullish light in most cases. So just wave 1 with an ABC pattern here. The same as we've been doing up here. The last time we spoke, we were looking for wave 3, 4, and 5. And the other point that I need to make too is that that you can see that there's 5 waves to the upside here. It's 1, 2, 3, 4, 5, and then we've got this A wave down here. So we need to bring all the other stocks, well, most of them. There's some that are not quite the same, and that would be Square, Block, and Facebook in the stocks that we follow. So they're not all exactly the same, but if they're kind of the same, then we need to bring them into this particular count, and that's what I've done with some of them. So and I'll justify that when I get to those ones as well. So this is the count that we want to be having a look at with stocks. I mean, stocks, really, this NASDAQ is really a moving average of those stocks, so that's what we need to sort of bring, because we've got to get the timing of them all correct. So yeah, so that's that. I'm just going to bring that to this side. Some of the stocks today, we're going to be looking at the daily chart, but not all of them. They all pretty much look like this in one way or another, and they, you know, if you put those eliticians in a room, they could all count this differently here. And yeah, so one of the things here is that in terms of trading safely, you could say I always like to gravitate to the closest largest number, in this case 150. So 150 as a nice tested support here would be a catalyst and a trigger for a trade setup to the long side, wouldn't it, if you could see that sitting on there? Because at the moment, you know, everybody's out there thinking, is this a bear market rally or is this a bull market? What is it? You know, that's the thing that's going through. So yeah, finding little boxes to tick like a nice support is good. So I think, I don't know, let's go to 1000 here. We'll see what's on this chart. Okay, so this is one that I've changed a little bit, in that I've put 1 and 2 here, 1 and 2 and 3, 4 and 5 for the third, 4th, 5th for the third, the 4th, and then 1, 2, 3, 4, 5 here for 1, and looking at an A and a B and a C in this case. You could also put wave 1 here as well for this. It doesn't really matter too much at this point in time. So what we're just going to wait for here is just to see how this plays out in this little space here. So nothing to do here today or in the next session. It'll be probably Tuesday that we'll be looking at moving in. And then one of the things is too, once we hit the midweek, Wednesday and Thursday, they tend to be the swing days in the market, so they can get quite volatile. So just remember that as well. And when you're building into the beginning of a trend, the retracements are quite severe. They can be, you know, the 50, the 61.8%, they could be 80%. So we'll just need to be a little bit mindful of that. But in the bigger picture of all of this, if you know you want the market to prove to you that it is strong or weak, and in this case if it's going to be strong, then it needs to take out the previous high here. That would be a nice setup for that, for you know, for that long trade at that point. Okay, so the next one is Nvidia. So in this case here, it's all pretty straightforward. From this low here, we've got 1 and 2 in here, and then 3, 4 and 5 here for 1, an A and a B and a C, all pretty simple. We can look to go long above here, but we'll end up just bringing that down to the B wave whenever that comes in to here. And when we get down to here, you know, if we can get 3 waves to the 50-60%, then we'll just simply be looking, you know, there will be 5 waves coming up after, you know, this. So there'll be something, you know, like this into the new high. We may be able to get this first, if we get this first impulse wave here, this will be an ABC coming back, and then you can trade the B wave long or this one long. But having 5 waves here tells you that you're going to get another 5 waves. If not, we just wait for these 5 waves, and then we'll look at this ABC pattern here, as I've mentioned before. So there's plenty of ways to get in, but to have an impulse wave first, you could buy at the bottom here, but you could get into a trap, because if there's going to be a bear market, it's going to be 1, 2, 3, 4, and then 5 down here, isn't it? So we don't want to get caught in that. We'll get the short trade if it comes into play over on this side here for that. Then there's plenty of ways, there's different ways to get that as well. So yeah, that first little 5 waves that comes off here, the reason that you want to wait for that for is because you can manage your risk. You can go long above the top and put your stop underneath here, or you can go onto the B wave and then put your stop under the C wave here. So you can refine it quite closely, and then you can use the closest largest number. We've got group 2 here, minor group 2, 65, 72 and 80. That should play out as support here for this before moving up. So in a nutshell here, what we would like to do here really in all of these is get 1 or 2 small positions in this space. Once the 200 becomes the support, then we're going to build in on through minor group 1 here, which will be 10, 20 and 30. Once we've got support on top of 30 there, we know that we're leaving this number and we'll be going to the 5 at that point. So the Fibonacci sequence 1, 2, 3, 5 and 8 will be moving to the upside. So we'll be we're in the bigger picture. What you'll see and what we'll be doing is that we'll be building in at the beginning of the trend here. So what we've been waiting for is we've been waiting for the 5 waves off the low here to help confirm that we are going to get another 5 waves up here, and that's what we've done. So we've got 5 waves here. We're going to have an ABC pattern here. We could buy on the low, but we're just not going to. We don't need to do that because we're going to be trend trading this and all of these markets. So we'll be building in all through here because we've got a long way to go at that point, and we'll, you can shovel it all in at one point, but then it exposes you. You've got higher exposure at that time. If you scale it in, then you can manage each position with a certain percentage risk on those, and once you get that to break even, then we can put in the next one and so on. Alrighty, Amazon's all pretty straightforward. We're counting 5 waves up there. There they are, and now we're looking for the ABC pattern here. So that could finish in the next session, really, and then we can, from Tuesday onwards, we could start building on that. Yeah. So that's all good at that point. I don't need to go into here at all at this stage, but we will be going long above the top. It won't really be like that. We'll be going long above the B wave, and probably won't be like that. We'll be getting a position down here somewhere, and we'll be looking for a little classic trading levels pattern. This is a classic trading levels pattern: the arrival, the reaction, the first high above the level, the ABC pattern here. So this is the level here. So the arrival, the reaction, the first high above the level, the ABC, and in most cases it's always wave 3, 4 and 5 here, then the ABC pulling back, and then we look for another little classic trading levels pattern in here. But we're going to try and get in, build some positions a little bit lower in here. We want to be building some in here, some here, and some all the way through there for that too, because anyway, that's what we'll be doing. So that's all pretty simple. Tesla, just having a look at the big picture here. It is possible to look at this as a wave 4 here, and then having one more move down for this. That would kind of just have the right look and feel about it for me. But the thing about that is that, well, if the rest of the markets are going to be bullish, I don't want to have expectations of it coming down here and putting my money on my expectations, because I could be sadly disappointed. If it does come down here, well, then I'll deal with that at that time. I need to stay in the now. And if this is going to be 5 waves up here, well, then we need to be looking at how to get in, to start building positions in this. It may not be, this may not be the A wave, the B wave and the C wave here. This, like I said, this might be down another notch here, or we might have a bigger bear market. But as I mentioned with Tesla in the get-go, is that this move here being in as an A, B, C, you can clearly see that it's not in 5 waves. It's in 3 waves here. So it's telling me that that's corrective. And if that's corrective, it makes the rest of this corrective as well. So that's what I'm sort of basing it on. But is that the low? That's the point that we need to understand. But today I'm just going to have a look at, just going to go to, I think, where we picked off here before. I won't look at the bearish count. Can we go here? What does this look like? Okay, so what we were looking for here all last week, we're just counting our curves and waves up through here and looking for the top, and there we go, we've got that, and now we're looking for an ABC pattern here. It does appear that we've got a nice impulse wave down through here, and as I mentioned last week, the A waves can look pretty scary. They can come down pretty quickly because they will take out stops, and that's why they trip out at that point, and so on. So it's a nice looking A wave. It's scary, so it scared me. So it must be the A wave. So we'll look for a bounce off this 700, and then we'll look for wave C here. Hopefully wave C will look like wave C here as well. That means that it'll be on less of an angle. That's the angle of this. So let's look at the angle. Let's see if we get an angle that's less than that speed, and that will help us. If we get one that's just as sharp, well, then we'll be looking at probably a 3rd wave at that point coming to the downside, and we'll have to look at this as 1 and 2, and then the 3rd wave will come here, and so on. But we'd still have to wait for it to still have to wait for the 5 waves to finish to come back up to short it to the next one. So once again, on the long side we'll be here, and then we'll eventually be up here looking at that B wave. If we come down below the 7,000 here, so if we have the B wave and the C wave comes down here, we might be able to get a classic trading levels pattern here, the arrival, the reaction, the first high above the level, the ABC pattern here, and then moving up here. It might be much more simple than that. It looks like it's got a habit of pushing through and coming back and sitting on it. So pushing through and coming back and sitting on it. So that would leave us with the second high here, and then this high here. In fact, I had a trade on there for myself, but I didn't get filled for that. But that's okay. I'll get filled over here on this. So yeah, so that's that. That's all good. And then over to Alphabet here. So we're looking at, I mean, calling, it's difficult to be bullish. It's the things that run through our emotions and our mind, because these markets really are, they're made by humans that are emotional, and I think that they are a reflection of our emotions in a way. So yeah, and doing the opposite to our emotions is pretty much one of the tricks in trading. And being bullish, in a scary bear market, it's the same as in a correction. I mean, I like corrections because not big ones like this, but I like when a market is moving up and then it's traveling sideways, and because I know it's going to move up again. So I like the corrections because that's where the trade setup should be. They just get a little bit roller coastery, scary down the bottom here like this, if that is indeed the bottom, so you need strong setups. You need to know how much you're going to risk at this point in the trade. Okay, so with Alphabet here, it's all pretty sort of simple for this. This is the daily chart, and go to the intraday chart at 100 ticks. So as you know, once again, we've been looking for 5 waves up. So the 1, 2, 3, 4, 5, and now the ABC pattern here. Once again, it could turn bearish. So this would be wave 1 here. So if I can bring this over here for a moment, this would be wave 1, and then would have wave 2. And then we would have probably wave 3 here, and then wave 4, and then wave 5 to the downside. So if it was going to be bearish, it would be like that, and then it would have an ABC back up, be simple and sharp, and then we would have another big move to the downside. So that would leave us short over here for that. So we need that. We'd need 5 waves down here to because 5 waves here would tell us that we're going to get another 5 waves at that point. So that's our short trade, that's our long trade. When we get the wave B in, that will also be our long trade once we've got that B wave high in. We'll also try to build in as we move up through here, all the way up through here. We're going to try to be building in. If you know the trading levels, then 2000 is a major level, then 1, 2, and 3 here. So getting support here, it's really important. We've got a classic trading levels pattern here. We've got the arrival, the reaction, the first high above the level, the ABC pattern here, and we'll get another little classic trading levels pattern here. But getting support on top of this number here, group 1, the number 3, then that tells us that we're leaving this number, and then the traders will start thinking, the psychology will start thinking about the 5 after the 3 will be the 5, So then we'll move up to here and we'll get here. But if we can get some, a few positions in here, then we can build on top of here and so on. So we'll see how it all goes, because we may get 5 waves here. We just need to be, open, and it's safer to be, the less opinions you have, the safer you'll be, I think. Just stay with this trade setup. Okay, so that can go to there. Microsoft, same. So, calling in the lows here is dangerous business, but you got to do what you got to do, and we need the right patterns to build in, and that's what we've been looking for. We've called the lows in. We've been looking at the 5 waves moving up. We've had a few trades in some of them, but our main event was really to wait for the top to come in, and then look at the ABC pattern. And then move from that point. So with this one, I think we're on the 2K here. Could be wrong. Doesn't matter. We'll find it eventually. Okay, so we've got this. So we're looking at wave 1 with an ABC for wave 2 here. I think I might just go to 100 ticks if I've updated that. Okay, yeah, that's better. So this is another one that I've tweaked. So we've got wave 1 here and 2 here, and then I'm going all the way up from wave 4 here, just to show you what I've changed from wave 4 here. 1, 2, 3, ABC for 4 and up for 5 here for wave 3, then wave 4, and then 1 and 2 and 3 and 4 and 5. It's a little bit small, but it fits, and I kind of got to go with that. It's the best fit too, because it's more important to pull all the markets in together into looking for this wave 2 area here for this. Once again, this particular move here appears corrective. It would have been nice if they're just on the nose with each other, these ones here. It would have been nice if that this B wave had clearly broken that top there. It would have forced that to be corrective. So that would have been helpful as well, but in terms of the bullish market. But anyway, we'll see how this will be a series of 1s and 2s in here coming down, I'd imagine. So it's no rush. We've got it on the B wave top here. We should leave it over here for the moment. Yeah, but this is where we are. So we're still, another session, and we'll see where we are with all of these here. That's that. And next one is Facebook. This is the bearish pattern here, so we can look at this as wave 3 here and 4 here, and then 1 and 2, and then 1 here, an A wave, a B wave, and a C wave here for wave 2, and then down for 3, 4, 5. So that's the bearish pattern, and we can go long under that. The bullish pattern, however, is on this pattern on this chart here, and this would look like this with wave C here, with wave 1 here, an A and a B and a C. So that looks quite corrective to me, so that's good. And then looking at 1 and 2 in here for that. So obviously the 200 is the line in the sand, and we want that as support. That would be helpful, wouldn't it? So that's what we're looking for. We'll go to the intraday there and check on this. So we've got wave 1 over here with this, and ABC for wave 2 here. And then we've got wave 1 with an A wave, a B wave, and a C wave down here. That's the way I'm counting it. So we've still got a good session for this to land here. And we'll be in no rush to buy the low here. We want to build, we need to build a case for it over here in terms of an impulse wave, and we want to confirm the rest of the market as well at that point. So I won't be buying on the low, and we just need to, and I won't be buying all of these stocks anyway. I'll just get some here and there, but yeah, I mean, in terms of long term position trades, that's what I'm kind of suggesting here for all of these markets. So not so much a day trading thing, more of a trend trading thing, and getting in and building some big long-term positions. So anyway, that's Facebook, so we've got time there. And Berkshire Hathaway, I've also pushed this into its top there as well, with 1 and 2 and 1 and 2, 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave for the third, the fourth, and then 1, 2, 3, 4, 5 here. So that's how that top plays out. We've got 5 waves here, so that's an A wave, B wave, and we need 1, 2, 3, 4, 5 down here for that. Sure, I mean, it looks better as an A and a B and a C wave up here, I grant you that, and it looks bearish, so we need to keep an eye on that as well. So in that case, these 5 waves down here, that would be wave 1 at that point. So we're not going to make a move if this is wave 1 here, then wave 2 here, and there'll be wave 3, 4, and 5. There'll definitely be a bounce off the 300 here. So once again, if we were going to short this, then we could be over here for this and shorter on that retrace there with on the basis we can short it on in that box, because we would have a larger 1, 2, 3, 4, 5 here. So we can short it here, and then we would also be looking to short it under here once that became the retested resistance. So once again, we're really building in at the beginning of this trend here, if that's going to be the case. But otherwise, we'll be building into the top of the market up here. So I think it's healthy to look at both sides. As I mentioned, looking over the weekend, it was really the thing that sort of took me away most was how sure those Elliott people were in their counts. You know, that was the thing, and I think that's a little bit of a dangerous thing, because at the end it all comes down to the trade setup. You know, I'm not a big trader by any means, but I have, you know, I have a flutter. I've got money in the markets and things. So, and a lot of analysts don't. So that's the other thing too. So let's move along. Now, square block here. I've been trying to sort of look at this as being bullish, this low here, but I can't sort of see it, you know. I can see PayPal with a possible low in it. Shopify looks like it wants to come down, another move. So from this top up here, it does count nicely as 1 and 2 and 1 and 2 here. You could probably even put 2 over here. Not that it matters that much, it's just a bit complicated. There's an A and a B and a C here. I've got it there for that, but you could put it here rather. But still doesn't make much difference, because you've got the same thing happen, the same pattern is happening here as it is happening here. So it does, in this case, it looks like it wants to come down further, doesn't it? So it's hard to go long when something's below the closest largest number for me, you know. But we're going to be looking at the bullish side of it. So I think we could be, I don't know if we want 100 ticks or 1,000, but we'll go in and have a look. So yeah. So I've got it like this so far. So I'm going to be looking at the bullish side. So I've got wave 1 here, and I have to keep this as wave 2. I'm going to look at this as wave 1. It can also be wave 4 when we go further down, but I'm going to just look at it as an A wave, a B wave, and a C wave here, and see how it progresses from that point. If it takes out any of these tops at 90 from this point on, we'll know we're bullish, but otherwise it will come down further. And in terms of coming down further, we'll need to see this come down further. And look, if once this does come down and then has a bounce back up here, we'll see if this is in 5 waves, and if it is in 5 waves, then we'll look to we'll go long above the top in that case. So we need to trade the tops as they go, but otherwise there's a good case for this to move further down. So in terms of a bear market, this particular market, you know, it can move lower. So we just need to be very careful about this one. And the bank, so I've also moved this in here like I've done with Berkshire Hathaway as 1 and 2, and then 1, 2, 1, 2, 3, 4, 5 for the third wave, fourth wave, and then coming into this here, we're looking at 1, 2, 3, 4, 5 for the third wave, the fourth wave, and then 1, 2, 3 ABC for the fourth and up for the fifth. So it's a bit small, but it fits quite nicely as well. And then we need to look at this as the A wave here, and ABC for the B wave, and then 5 waves down here. So you could short that if you wanted to. It's taking out lows. This is corrective, so you could short this if you wanted to at this point. And the stop would just go above here on that. That's all good, and it's just really for day trade, you know, short-term traders at this point. So we'll see what it looks like once it gets down here. You'll need to take the money off the table at 36.50, and the rest of it 35, unless you see it drop, you know, unless you see it gap down. If you see it gap down like this, then you want to hold on to that position, because it will be bearish at that point for sure, you know. But otherwise, we'll just watch it move down in 5 waves, in line with the rest of the market. And the other one, which is Morgan's here, the same thing as well in terms of the top there. We're looking at the A wave and ABC for the B wave, and 1, 2, 3, 4, 5 down for this market here. So you can see that probably, you know, depending on how long wave 4 takes, we're looking at you know, a whole session at least, to get close to these lows down here. So, and then we might need another session after that too. We'll see where we are in all of this, but we need evidence. Once we've got this ABC, we need evidence for a move up. Otherwise, we need to be looking at a bearish move. But that would be wave 1 and 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave, and fifth wave coming down. So then we'll catch the ABC back up again, and then we will be looking on the short side over here for that. Alrighty, I'll leave it all at that. It's a long video, but covered it as quickly as I can and gave my thoughts about everything. So just to recap, I think it's important to be open. I think the trade setup is more important than being right or wrong. So that's where the focus should be, on making money and the trade setup and managing that exposure as well. Okay. Alrighty. Cheers.